On today's show, we are going to look at crypto taxes, and with the help of my good friend Nate Polmateer, we have 8 tips to help you make your crypto taxes a little easier. My name is Candace, and we'll begin right now. It goes without saying that most people are not a fan of tax time. Of course, adding crypto to the mix is like adding another layer of complexity when taxes are already complex enough. However, it doesn't have to be so scary, as we are going to break down a few tips that can make it easier and hopefully a little less scary. Wait, where is Nate? I thought he was coming over here. Whoa. Okay, so it looks like we're doing this from Nate's, or I've been kidnapped by someone who likes to read a lot. Okay, let's start with Nate and the first tip.
Candace, that was great. So glad that we can partner up together and just go over crypto tax. Let's look at taxable events. There are 4 really taxable events in cryptocurrency. One is when you sell your cryptocurrency or you gift your cryptocurrency to someone, or if you trade it on a crypto exchange. So if you're trading Bitcoin for Litecoin, then that's a taxable event. That's an event where you are going to need to claim the gains on either one. Make sure to claim all your expenses as well. Those are your trading expenses anytime you move it. Converting cryptocurrency to a government issue. So what that really means by the CRA is if you are buying your cryptocurrency and then you sell it later for Canadian dollars. Anytime you do that, then you're gonna pay a capital gain or maybe a capital loss. Using cryptocurrencies to buy goods and services. CRA treats it as a commodity. So anytime you barter, which I'll be talking about a little bit deeper later in this. So those are the 4 things regarding cryptocurrency taxable.
The easiest way to track your crypto is with a service such as Coinly. As services such as these take the math out of your hands and often make it very easy for tax time. The other way is to manually track your assets, and that is perfectly okay, though it does put all the math back in your hands. There are multiple ways you can do this, as the CRA only asks that you are consistent in only using one method. I use adjusted cost base, as that method keeps a running average of your costs, which you then base your capital losses or gains off of. Another common method is first in, first out, or FIFO, which means you are always calculating your gains and losses against your first coins. There are also the high in, first out, HIFO, and the last in, first out, LIFO methods that some people like to apply. Just remember, whichever one you decide to use, you need to remain consistent, and you can only use that one.
Oh, hey. So the other one would be changing exchanges or exchanging crypto. And what is that? Well, let's say you have your phone and you buy some crypto and you're like, you know what? I really don't want it on my ShakePay account. I want to send it to another account. So you take it and you exchange it. You send it to another exchange. Send it over to Newton because you want to buy some Avalanche tokens. So you send it over to Newton. That's not a taxable event. Now, when you switch the tokens from the Bitcoin that you have, the Bitcoins, then what's going to happen is it's going to create a taxable event. But you're going to have to make sure that you track how much that Bitcoin was when you exchanged it for Avalanche. And that would be a taxable event. But also make sure to claim all those expenses as well, right? And don't do it too often, because then it's a business. And I think Candace has something to say about that.
Your crypto assets can either be a capital gain or a business income. The difference between these is in the behavior of how you trade and make your crypto profits. When you are investing long-term, it is considered a capital gain. However, if you are treating your crypto trading like a business, such as a day trader, it is no longer a capital gain and is instead a business income. A business income is 100% taxable, and you cannot use capital losses against them. You can, though, use business losses.
The next thing I want to cover is those events that are non-taxable. These are the events that you really want to look into. That's why you're watching this video. So the non-taxable events are pretty simple. I found 3 at least. If you find more, let us know in the comments below. Also, make sure to subscribe to Candace's channel. She does some amazing videos on finance. All right, moving on. Non-taxable events, holding cryptocurrency. So if you go to an exchange, let's say ShakePay, code listed in the description, and you take your Canadian dollars and you buy Bitcoin. you spend $500 Canadian and you buy Bitcoin. Now, if you just hold that Bitcoin on the exchange, you never sell it, and you hold it for 1,000,000 years, you're not gonna pay taxes on it. If you move that Bitcoin into a cold wallet and you move it into your ledger, just buying it is not a taxable event. So some people ask, I bought Bitcoin this year and I paid for it. Is that a taxable event? No, it's not a taxable event. And the third one, looking through the CRA in cashback rewards. So if you were to have a Visa card and there were cashback rewards, you don't need to pay taxes on that cashback. So likewise, if you had a Visa card that gave you cashback rewards in cryptocurrency, there's no clear standard there with the CRA about cashback rewards.
Airdrops, staking rewards, shaking sats, and interest sure do feel like free crypto. But when it comes to the taxman, nothing is truly free, and they always want their share of the pie. And based on that, there's a special way we need to treat all of these crypto freebies. Airdrops, staking rewards, and shaking sats are all treated as $0 crypto, which means they are 100% capital gains. You would enter them into your adjusted cost base as $0 crypto. Interest is a little different, as it is treated as income. Your interest payments must be claimed, as income.
Oh, ha! Thanks, Jim. Trading you that rice for some coffee. What is that? Well, that's a barter transaction. It's when you trade one good for another good. The CRA treats any transaction where you trade crypto for an item as a barter transaction. And so what does that mean? Let's say I want to buy this thing and it's $50. And so I take my Bitcoin and I buy it for $50. It's almost like a selling transaction. You have to convert it over to Canadian dollars. And anytime you do these transactions, they have to be consistent. Bitcoin and cryptocurrencies, even though they say currency in them, they're not a currency to Canada, which is super annoying. So if you wanted to buy a whole bunch of coffee or t-shirts or whatever, those are all barter transactions in Canada, and you have to use the barter method, which is the value it was when you changed it. Anyway, back to Canada.
Crypto capital losses can be used to offset your capital gains. It doesn't matter if that capital gain comes from crypto or stocks for that matter. You have to apply your capital losses against your current year's capital gains. If your losses are more than your gains, you then have a net capital loss, and that can be applied against the 3 preceding years, or you can carry it forward into any future year. The inclusion rate on capital gains and losses is 50%. This means that if you have a net capital gain, you will pay tax on 50% of it. Hopefully, those tips have helped out a little bit. I will link my other tax videos below for your convenience. Now, if Nate can just return me to my studio. Oh, it is so nice to be home. Nate is also making this exact same video, though it won't exactly be exact. In fact, it will be totally different, so check his version out too. I will link it below. If you like what me and Nate did here today, let us know in the comments. The comments here on his channel too. And we can look at another collaboration in the future. If you guys loved this video, be excited, there is way more to come. Until then, why not watch one of these videos? And before you jump into that content, just be sure to like and subscribe to support the channel. I'll see you in the next video.